Good morning. It is July 17th. We're here on a Monday in the dead of summer. Hopefully, you're watching the markets as much as we are because we're heading into earnings season. We think it's going to be really interesting because after 16 months of rising rates in the US and internationally, cash in the US now yields more than equity earnings and 3.5 times US dividend yields, a multiple that usually means watch out for equities. ASR had a really great chart this morning showing how all the returns in the last year were due to multiple expansion. So when that's the case, you really have to have earnings to pick up the slack to really get additional momentum. So this earnings season is going to be quite important. Or you have to have more liquidity entering. So keeping the party going is going to require new liquidity inflows. But the most recent data from CFTC and other groups show the rally is getting extended via positioning. But what about cash, Nadine? Everybody knows there's a lot of cash on the sidelines, right? Well, retail investors, including, some of our clients, they hold 1.4 trillion in cash mutual funds, and institutions like us hold maybe about 4.3 trillion. But ASR is out with a really good chart showing how relative to the US market, the levels aren't enough to really move the needle to where it needs to go to catch up to where the rally has taken because of that multiple expansion. So as a team, we're really renting versus owning positions right now. That means you got to be a little bit more careful. There's more asymmetry to the downside if there's disappointing news from a macro perspective or fundamental coming out of earnings seasons right now. So be careful. But we are going to go to the Longbow dashboard and just flag some things that are showing up today with trading range signals. Let's head over there. So if you're also looking to rent versus own, I'm giving a few things. The Qs, obviously the market's a little bit up this morning, heading near the top end of its trading range, is not there quite yet. But I'm giving you a bunch of oversold. So AMT, American Tower, you've got CSX, so railroads, you've got Ford, HCL Healthcare. So, pick your poison of the type of industry or sector that you like. If you like the management teams there fundamentally, but I'm showing you oversold positions with pretty solid odds, bullish short-term signals. And for the most part, so it's not here with AMT, this is really because of interest rates. You're seeing bullish medium term as well. So you're getting a pretty nice setup with implied volatility premiums. People are worried about these positions. So if you're looking for just technical here to then decide fundamentally what you might be interested in, I'm curating a few names for you. And then similarly, but not as good on the short side, or if you're looking to trim, if you have these positions, I see biotech and also Nomad Foods, which has a lot of frozen foods over in Europe. It's showing overbought. So your odds are to the downside and you've got a neutral to bearish. So I obviously would love to see bearish, but we're not getting that this morning. And we're also seeing a premium here. So you gotta be a little more careful on these, but I just did want to flag a few overboughts for you as well in case you're looking to add to that side and want more technical first step until you go to fundamentals. I mean, I like the business for Nomad, but we are a little more careful on the food businesses right now, especially since they've been doing a ton in M&A, and we tend not to like to have businesses where that's where they're showing growth versus organic growth. But I'll let you dig into that fundamentally deeper. That's it for today. We'll keep showing you some curated views here and along the way in case you're looking for ideas to investigate. But as we said before, be careful. We have valuations stretched a little bit, and with the China's data out showing that the GDP is slowing there, not up to par with what people expected. On the negative side, that obviously is going to put pressure, but we would caution this isn't time to go short Chinese equities. They've had a nice fall from the beginning of the year, and if you had any kind of stimulus, it could really bounce back. Caution there, but we also say that growth isn't what maybe everybody's expecting across the world. So keep that into consideration as you're looking at fundamentals through this earnings season. That's it for today. We'll keep you updated each day here throughout the summer as you look at your portfolio and your positions. Take care.